The top business stories live from the Sky News City studio. A big jump in company profit warnings last year, more than at the peak of the global financial crisis. The average cost of comprehensive motor insurance rises by a third over the last year. Plus, shares of Philips surge by as much as 47% as it settles a long-running legal battle in the US. I'll be speaking with the chief executive. Good morning, this is Business Live with me, Ian King. Nearly 1 in 5 UK-listed companies have issued a profits warning in the last year, more than in 2008 at the peak of the global financial crisis. That's the key finding in a report published today by EY-Parthenon, the consultancy service. On a more positive note, it found that profits warnings during the first 3 months of this year were down 7% on the same period in 2023. Well, with me now is Joe Robinson, EY-Parthenon partner and UK and Ireland turnaround and restructuring strategy leader. Joe, welcome to you. I mean, obviously the picture is bad over the last 12 months, but there is cause for optimism.
Yeah, I think we are starting to see some green shoots. I think the profit warnings for last quarter were 70 compared to 77 at the back end of last year. And we are starting to see some optimism coming through. With regards to the numbers are still quite high with regards to those that have issued more than 3 profit warnings. But we are seeing some more M&A activity as a part of their delisting process.
Quite striking, though, that of those issuing warnings this year, a third of them are in consumer-facing businesses. Yeah,
we're really seeing the pressures on that discretionary spend, whether that's with the public and the consumer itself, or actually as well with business-to-business spend. We're starting to see that as well.
Now, profit warnings can come for many reasons. I mean, is it a case, in some cases, that these businesses have not been getting market expectations properly correct? They haven't been, geeing up the market for bad news?
I think it's an announcement to the market that there is, their profit isn't as expected. And so, but we're seeing the main reasons around driving that is around delays in contracts or contract cancellations. We're also seeing that around consumer spend, as we mentioned, but also higher costs. And the increase in interest rates is also starting to take its toll.
Yeah, so this isn't a failure of managing expectations on the part of companies. It's the fact that trading conditions have deteriorated.
Yeah, and we've seen this really for the last few years now, this prolonged period of pressure, which is very different to the global financial crisis where it was probably a single economic event. But that really bit where we say to companies, look, the ability to really stress test what they're doing and look at how they can take earlier action is really important.
Obviously, we've been expecting interest rate cuts by now. We haven't materialised. Do you think companies have been caught on the hop by that?
I think we've known it's coming and they're having to look at what their financials and what the impact is on their position. I think over the next few years, we're going to see significant amount of companies that are having to look to refinance. I think over the next few years, up to 3 to 5 years, there's about 500 billion of debt that will need to be refinanced at higher levels.
There's an old saying that profits warnings are like buses, they come in threes. Is there any evidence for that right now?
Yeah, it's still at a high level. So we've got 39 companies that have issued in the last 12 months, over 3 profit warnings, and anticipate that 20% of those will delist. But the majority of those 20% actually have been looking through an M&A activity. So as I said, we're starting to see actually the M&A activity is starting to increase slightly as well.
That's really interesting, though. A company that issues 3 profit warnings or more in what, a year, has a 1 in 5 chance of ending up in the breaker's yard?
Well, not necessarily. Some of them are surviving, as I said, through M&A activity. And I think there's just other options out there around restructuring, whether it's looking at the balance sheet or what else they can do around their liquidity to actually, in their own business to self-solve, to actually then look at how they can deploy the cash back into other areas of their business.
OK, Joe, got to leave it there. Great to see you this morning. Thank you.
Thank you.
Some other business news stories for you now. And the music investment company Hypnotic Songs has agreed to an increased takeover from the US private equity giant Blackstone, valuing it at $1.572 billion. The increased offer, first reported yesterday by Sky's Mark Kleinman, trumps an offer agreed last week by rival investor Concord. Hypnotic floated on the stock market in 2018 with the idea of buying songs and exploiting their rights in TV, films and computer games. Artists whose songs it owns the rights to include Lady Gaga and Blondie. The average cost of comprehensive motor insurance has risen by a third over the last year, according to the latest figures from the Association of British Insurers. The ABI's motor insurance tracker suggests a typical policy costs £635 during the first 3 months of the year. That was compared with £478 in the same period last year. However, compared with the final 3 months of last year, premiums were up by just 1%. The ABI said this showed how competitive the motor market is, with insurers absorbing significant cost rises but keeping prices relatively stable. Shares of Petrofac have fallen to an all-time low this morning, down 32% after the oilfield services company announced a delay to the publication of its 2023 full-year results. The business, whose clients include many of the world's leading energy companies in the Middle East, North Africa and the UK North Sea, also revealed that some of its creditors have offered it a $300 million credit line. It said this was likely to require the conversion of a significant proportion of its existing debt to equity. Now, shares of Philips have surged by as much as 47% this morning after the Dutch medical technology giant unexpectedly announced it has settled a long-running legal battle in the United States. Philips will pay $1.1 billion to settle personal injury claims following a recall of millions of ventilator devices used to treat sleep apnea. It did not admit fault or liability. The settlement meant that Philips reported a net loss of €999 million for the first 3 months of the year, compared with one of €665 million in the same period last year. Well, with me now is the Philips Chief Executive, Roy Jacobs. Roy, great to see you again this morning. This must be an immense relief to you.
Today's an important day. We had two pieces of news which we believe are very relevant and important. Firstly, on operational performance, we showed that we started the year in line with plan, with continued growth, strong profit improvement, and also order intake growth outside of China resuming positively, especially in North America. But also we made very significant progress in resolving the consequences of the Respironics recall. And especially after having concluded the consent decree that was now court-approved, having the economic loss court-approved, we also resolved personal injury and medical monitoring with a settlement. And actually that gives a lot of clarity on the way forward for Philips. On top, we received an insurance settlement where actually we'll get an inflow of more than 500 million of insurance money to offset some of the product liability claims that are out there. So overall, this gives a lot of confidence in the future of Philips. And also we reiterated that we are confident in hitting the 2024 plan, but also the 3-year plan outlook that we put out last year, which includes the 2025 outlook.
Roy, let me pick up on a couple of the points that you've made there. You mentioned the settlement with insurers. Will that cover the bulk of the recall costs?
It will not settle the bulk, but it's a very meaningful contribution. It's €540 million of settlement that we're getting to offset the product liability claims. Now, as we announced today, there's $1.1 billion of US dollar for the personal injury and medical monitoring. And last year we announced that we set aside 575 for the economic loss provision. So against that, we have actually 540 million of incoming insurance contribution.
You still face lawsuits in Europe on over this situation. Have you any idea how much that is going to cost the company?
No, for us it was very important to actually close and make an end to the litigation in the US, because that's where a lot of the uncertainty is. It's also where the vast majority of the cases were. And as you also mentioned, what was very important, we do not admit any guilt. We also have our own testing that showed that no appreciable harm was done. So actually we look confident to other cases that are currently potentially out there, how we can deal with those. But the vast majority of what we were handling with was actually US related, and there we really now put an end to it.
You are still facing a Department of Justice investigation into this affair. Any idea what the timescale is on that?
No, we're not privy to that. We are in full collaboration with the DOJ. We have kind of providing them with information they've been asking for, but we don't have further insights in the timeline when, if and when they would come forward with any further information or conclusions.
Now, as you touched on, you have quarterly results out today as well. I was quite struck by the fact that underlying earnings were up despite sales being slightly lower.
Yeah, we had of course, last year we started a very strong program to get our margin improved. That was a combination of making sure that we get back to growth And that continued also in the first quarter, and actually was on the back of 6% last year. So also we had a strong compare that we kept growing on. Furthermore, we took very strong productivity measures last year. That was a combination of productivity on procurement, but also we took measures to simplify the organization, and we are ahead of that plan. We reduced 8,500 roles by now, a very painful measure, but one that is paying off, as you can see in the strong profit improvement that we have been showing.
So your margins are up. Are you at all bothered about growing the top line this year? Does that remain a priority?
It is a priority. We also have reiterated that actually we believe that for the year we will grow 3 to 5%. Now, important for that will also be how China will be doing. We see that the rest of the world is strengthening, so that gives confidence in that full year outlook. But also China, we expect actually to contribute more in the second half. I was last month in China. I was talking to the vice president. I heard from the government themselves that they're putting now in place a new subsidy program to actually invest and upgrade old equipment. So actually that should also come in the further second half of the year, as they're currently working through the processes of getting the claims in for subsidy programs and then paying out that money that will go into the market and support also the market demand.
OK, Roy, we have to leave it there. It's good to catch up with you again this morning. Thanks very much indeed.
Thank you so much.
Well, the big event in markets today has been a surge in the Japanese yen. That's amid signs that the authorities in Tokyo have been buying the currency after it last week hit a 34-year low against the US dollar. The pound is currently ahead by nearly a third of 1% against the dollar, unchanged against the euro. Dollar generally on the back foot, it appears, this morning, because the single currency is also up by nearly a fifth of 1% against it. Well, over on the equity markets, Friday night, solid finish on Wall Street, during which the S&P 500 enjoyed its best performance since last October, was followed by a largely positive session for stocks in the Asia-Pacific region overnight. You can see the Nikkei in Tokyo rose by 4/5 of 1% despite that rally in the yen, whose recent weakness, of course, has helped bring in foreign buyers. Well, here in Europe, here's the current picture. All of the main markets, well, there's been a bit of a sell-off in the last half hour. You'll note the IBEX in Madrid in the bottom left-hand corner of the screen. That is lower after Spain's embattled Prime Minister, Pedro Sanchez, insisted he would be staying in office. His wife is currently the subject of an investigation by the authorities there. In terms of individual talking points, well, Philips is the biggest, as you might expect there. But another major one is Deutsche Bank. That's fallen by some 6% in Frankfurt on news that it faces making a major provision regarding litigation over its takeover of Postbank in 2010. Well, here in London, the FTSE 100 has continued where it left off last week. There you go, another fresh intraday high in a broad-based rally. In terms of the talking points, Mike Ashley's Fraser Group is the leading blue-chip gainer this morning. It's announced a new share buyback programme this morning to the tune of £80 million. Elsewhere, Beazley, the Lloyd's insurer, is up by 1.75% on a trading update, while Anglo-American is ahead by nearly 2% amid hopes that rival BHP will increase its takeover offer for the miner. As for the oil price, that's been drifting lower this morning. Barrel of Brent crude will currently set you back $88.91 a barrel. That's off a little under 2/3 of 1%. Well, joining me this morning is Russ Mould. He's investment director, of course, at AJ Bell. Russ, great to see you. What's on your mind this morning, Russ?
Well, you've spilled all the beans. It's buybacks and takeovers, and they're probably the two biggest stories. So you've got Fraser's with its fifth or sixth buyback in the last 3 or 4 years. That's returned over £400 million to shareholders, removing a knock that it used to be a profitable company when it was Sports Direct that then never gave anything back. So that deals with that. And then the Hypnosis songs fourth bid, yes, and the ongoing speculation of Anglo-American. So I think when you add it all up, the FTSE 100 is offering a yield of around 3.5%. You're getting 2 to 2.5% on top of that from buybacks, another 1 to 2% from takeovers. So your cash yield, the actual money coming in, is between 7 to 8% on the FTSE 100 this year, if the forecasts are any good. And that beats inflation, beats cash in the bank, beats gilt yields. And that's one of the reasons why the index is, despite all of the bearishness that surrounds it, setting new all-time highs.
Yeah, absolutely. Fraser's Group, do you think Mike's a bit frustrated at the share price?
It's not too far away from its all-time high, but it's one of the smallest companies in the FTSE 100, which might be exercising him a little bit with the quarterly review coming up. But I think he clearly feels that, you know, the all-time high aside, yeah, the shares probably do look cheap on an earnings basis, for example. Yeah, I'm sure that's part of it. Why do companies buy back shares? Well, in theory, it's to justify confidence, reward shareholders, and say, actually, look at us, our shares are undervalued.
Yeah, absolutely. I mean, it's worked very well for Next over the years.
It has. I mean, some executives, you could argue, use them perhaps a little bit more cynically, you would say. It's not always a gesture of faith in the share price. Sometimes it could be just a hit of profitability trigger or an earnings per share trigger and trigger a few stock options, but don't think that's the case at Frasers, no.
Yeah, so what about Anglo-American then? Are we expecting BHP to come back?
And the share price is telling you that somebody's going to have a look round. I mean, the weekend newspapers even put the names of Rio Tinto and Glencore into the frame as well, and they've both got a history of making big acquisitions. I mean, Anglo-American, when it was down at £17, £18, was trading at barely the book value of its mines and assets, which, all right, you can question whether the mines were correctly valued because it was a write-off last year, but overall it was a terribly cheap company, and you can understand the opportunistic nature of an approach now. A lot of their businesses are quite near cyclical lows, with possibly exception of copper, so you can understand why people would be interested in trying to perhaps pick it up on the cheap.
Yeah, I thought Ollie Shah made a good point in the Sunday Times yesterday where he said Glencore would be the likeliest bidder on the basis that they just buy it lock, stock and barrel, whereas BHP are setting all sorts of conditions.
The BHP deal is very complicated. They want to spin off the South African iron ore business, the South African platinum business. They're really interested in copper. They're probably not too bothered about diamonds either, which is an industry with challenges of its own at the moment. So I can understand why the simplicity angle would appeal. But so now it depends on price. Ultimately, any buyer will want to pay a sensible price. I guess again the thing with the FTSE 100 is for all of the bearish news we've had, lots of bids. Old rule: you can have cheap stocks, good news, just not both at the same time.
That's a very good point, Russ. Now, what about Hypnosis? Is this game, set and match to Blackstone, do you think?
Well, we've gone from 116 to 124 to 125 to 130. Blackstone probably should have the inside track, given they have the relationship with Mercury-Cariades in the first place. So I would think Concord will have another look. They clearly felt it was worth the second bid. The share price doesn't seem to be responding in a way that would suggest there's a knockout bid coming, so maybe this is indeed it. And shareholders, I'm sure, still can't believe their luck. Share price down at 60p a month ago, lawsuits flying everywhere, dividend cut, and now there's a bid. They must be thinking, thank goodness.
Somebody up there likes us.
Yes.
Yeah. Russ, got to leave it there. Great to see you this morning.
Thank you.
Thank you. Still to come here on Business Live, how to protect the mental health of chief executives. Don't go away. Brilliant, Mason.
Play Sky News.
From the Sky News Centre at 7.
Now that you're up to date, we can go into a bit more detail.
Things can change incredibly quickly.
Taken by surprise.
Have you ever known a moment like this in British politics before? Yes. Cheers.
We'll start with breaking news.
Let's get the latest on the ground.
So, by the end, we'll hopefully all understand what's going on in the world just that little better.
They have breached the road. There is a lot of gas being fired all around us. It is an absolute carnival kind of atmosphere out here for Prime Minister Modi's decisive victory. These students are defying the prohibitory orders, and now they're going to be arrested. We aim to be the best and most trusted place for news. The roads have been inundated. The only way out is to get people by boat. This on any given day would have been bustling with people, but today it's absolutely deserted. I'm Neville Lazarus, and I'm Sky's reporter based in Delhi.
Traveling is not just about the destination. It's also about how you get there. Fly Emirates, fly better. Fly Emirates, fly better.
Welcome back. Earlier on in the programme, we discussed the incidents during the last year of profit warnings, always a stressful event for chief executives and chief financial officers. Another stressful event, however, is the deadline to file company results. Paracelsus Recovery, which is based in Zurich and London and which specialises in the treatment of business people, says it sees a spike in referrals of CEOs at the end of April, which is usually the deadline for the filing of first quarter results. Well, joining me now is Jan Gerber. He's chief executive of Paracelsus Recovery. Jan, very good to see you this morning. What sort of conditions are CEOs commonly being referred to you with?
Well, when they come under pressure, it's normally a sort of a burnout or an anxiety attack. But there are underlying issues. You know, what makes you more likely to land the top job in the first place actually makes you more vulnerable for your mental health.
I'm very startled, though, that it's the Q1 results which seem to cause this sort of spike in anxiety rather than the full-year results.
Well, it's a lot of the mid-sized companies will actually report the full-year results more in March, April. And I think, there's still sizable companies with a lot of responsibilities on the shoulders of the chief executives.
So how does this stress and anxiety manifest itself? What sort of conditions typically are we talking about?
Well, normally it's just trying to cope until you can't cope anymore, until the pressure's off, which often with the filing of the results, the information's out. Coping can be various ways. Often when you can't sleep because of anxiety, you take prescription medication or you self-medicate with alcohol or other drugs. You can act out in all sorts of ways, or just sit out your anxiety attacks.
So CEOs, though, by and large, are very, very successful, very able, very capable people. Are you saying that behind the scenes it's that they're all desperately worried about things?
Well, behind the scenes, we're all human at our core, Ian. And chief executives and politicians and, nobody is really different there. The image that you have to portray, especially when you lead a large organization, is not the human being that's actually behind that facade.
It's funny, I often say this to people, that being CEO, that although they're paid well, it's quite a lonely job at times, isn't it?
It's a very lonely job, because you also have to be careful who you share, your worries with, because you might leak and then the market might react. And also, there's not a lot of peers that really understand the pressure that's on your shoulders. Sometimes you have to close family, but then when you're not home a lot because you work a lot, which tends to come with the job, that also falls away as well. So often, you find yourself in a very lonely place.
So how do you treat someone who comes to you and says, look, I'm just completely facing burnout here?
Well, we're very pragmatic in our treatment approach. So we realize, somebody who comes to us from a very stressful and high-profile job, they can't just disappear for many weeks on end because, again, the markets will ask questions, will react, and so on. So whatever works, somebody can come in and out. We can send therapists to work with them. Really, whatever works. You have to be very pragmatic rather than dogmatic when it comes to if you want to be effective with mental health treatment.
And how do you judge success or failure with some of these patients? Is it when they return to their job and they're back to the way they should be? Is that success?
It's something that's really hard to put into quantifiable statistics. For me, success is anything that's, that somebody has a better quality of life than they had before. Even if there's the ability to cope again, but still suffering, whereas they couldn't cope anymore before without help, that's already a success in its own right. Success kind of being well and happy dancing for the rest of your life, I guess nobody will ever achieve that. Life brings its ups and downs.
OK, Jan, we have to leave it there. Good to talk to you this morning. Thank you.
Thank you.
That's it from me for the time being. I'll be back at 4:30 with our afternoon edition of Business Live, of course. Hope to see you then. In the meantime, as you've been watching this morning, it is a very big day in the world of Scottish politics. We are expecting Humza Yousaf, the First Minister of Scotland, to give a news conference at Bute House in the next few moments. Taking you through that right now will be Jane Secker. Jane, over to you.